Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to look at the 40th COT report of this year, and as usual we're going to start off with the changes in commercials positions. Here we go. As you can see, we've got the 30-year bond on top of our list with a 27% change in commercials positions. Huge change over there. Commercials jumping from a roughly 50,000 contracts net short level almost to zero, basically almost becoming net long. There was a huge change in large speculators as well. This is of course a unquestionable bullish COT change signal, possibly pushing prices higher in the upcoming few days. I would say that this is actually a good point in time to get such a signal. If prices were already in rally mode, let's say Thursday, Friday, it would be a bit more difficult to find a good entry point. Jumping to the 5 years chart, you can see that we are more or less in between the two extremes. So basically, it's hard to tell which extreme is larger. What's for sure is that the last extreme was bearish. You can see that we had one over here mid this year and a few months ago. Another one, you can see how well these signaled tops in the market, and now we're not at those all-time bullish extremes. Of course, we can consider this one as a relative bullish extreme. I mean, you can see back over here we had some bullish extremes that were actually pretty effective. The one I'm showing you right now here from mid 2015 was actually a very successful signal. We're not at that level, but still, I mean, compared to these all-time bearish levels, we're definitely further away. Moving on to lean hogs, we have a 22% change over there in commercials positions. You can see that change over here. Bearish, of course. You can see Friday there was a decline in the market. And jumping to the 5 years chart, you can see this all-time extreme in small speculators. They've never been so pessimistic about the market, which I would say is a good sign upwards. It's definitely a more bullish signal for us. Small speculators betting on lower prices, basically. That's what it says. And you can see prices have already gone lower. Now, commercials, as you may see, are, I would say, definitely closer to their bullish extreme. Same is the case with large speculators, maybe not as obvious as in case of commercials. So it could be actually a good trade upwards. Jumping to soybean oil, we have a 20% change over there in commercials positions. This is a bullish COT change signal, no question about that. The same change size can be seen in large speculators. Jumping to the 5 years chart, let's have a look at the COT Extreme. Here we go. You can see that the last major extreme was bullish back over here, and prices have actually gone higher. Now they've basically fell back a little bit, and as they did, you can see that we have reached a, well, actually we haven't really reached anything. We have not reached a significant bearish extreme. There was a relatively larger bearish extreme and that actually ended this rally, and now we're moving in the opposite direction. So I wouldn't say soybean oil is the best market for us to trade this week based on the COT report. So let's jump over to large speculator COT Extreme and have a look at the Canadian dollar. British pound, don't worry, you're going to come afterwards. But let's start off with the Canadian dollar, where we have a 256 report extreme in large speculators and a 245 report extreme in commercials. You can see that traders barely changed their position, 0, 0, 1. So they're more or less in the same position, net position, as they were last week. So that's not much for us in the near term. So let's have a look at the COT Extreme situation, which, as you may see, is definitely more clearer. Last week I was talking about the Canadian dollar, that there is this bearish extreme in the market still existing, even though prices have already gone lower. So it definitely underlines to us that prices can actually continue this direction and go further down. because if you look at the chart, bullish extremes are way far, I mean, very, very far away from the levels we're at right now. So there's a lot of space left for traders to, put away their profits they made on the rally. So, and most probably that's what they're going to do. Let's jump over to the British pound, where we have 159 report extreme in large speculators. You can see prices have gone much lower than the case of Canadian dollar, and the bearish extreme is definitely there. It's not as large as it was in Canadian dollar. It was 256, here it's 159, but it's significant. No question about that. You can see that we had this. The most bearish extreme was back over here mid 2014. A beautiful COT extreme signal, as you can see, basically indicating this top, and from there prices have gone much lower. So basically we can expect prices to go further down based on the report. Of course, caution is advised because we have not reached those all-time bearish extreme levels yet. But the price action is confirming the signal. Natural gas is our next market with a 43 report extreme in large speculators, not a large one. Yep, and you can see on the chart that it's not much. So the last extreme was actually a bearish one. That was an effective signal, as most COT extreme signals are. You can see prices have gone a bit lower. And is this a bullish extreme or relative bullish extreme? Well, I don't think so. I'd move on from there and look at other markets. And there are other markets. All markets can be seen. The COT charts can be seen for free on our COT charts page. Of course, the really good COT analysis can be done on this page, where you have a chance to look at other COT report types, other data types. You can do a historical analysis. You can look at market complexes as well. You can set your own COT change signal, add long-term trend, volume, and open interest scores. You can look at the COT index. A lot of great functions over here. I hope you're going to check it out. Have a great weekend. Take care. Goodbye.